Today I'm going to present question 1, A and B. Okay, for the question 1, the question asks for the accounting method for the investment. Okay, the view-centric berhad should use acquisition method to record the investment for its subsidiaries. This method used because the parent acquired control more than 50% of its subsidiaries. As for this case, view-centric berhad acquired 80% ordinary share and 25% of debenture control of the SQZ berhad, while acquired 60% control of a miskin berhad. Thus, view-centric has gained control over the subsidiaries, which is a miskin berhad and the SQZ berhad. Okay, move on to the question B. The question asks to calculate the bargain purchase of the goodwill for its subsidiaries. Okay, first for the SQZ berhad, the consideration transferred from cash, we get 224,000. And then we calculate the NCI, which is 20% of the percentage control times with 200,000 of the ordinary share times with RM4.40, we get 56,000. The 56,000 we put it under NCI column. Why we calculate with RM4.40? Because in the additional information, it asks to calculate the NCI over its fair value. Next, we calculate the fair value of the net asset. First, we have share capital 200,000 or the ordinary share, retained earning 12,000, general reserve 44,000, and the ARR of the property 5 million. And we get the goodwill from the calculation is 18,000. Next, we calculate the impairment of goodwill as stated in the additional information number 11. 10% times with 18,000, we get 1.8 million. And we minus out, we get 16,200 ringgit for the goodwill. Okay, for the acquisition of the debenture, conversion transfer 8% of debenture is 7 million. We minus out with the debenture 25% percentage of control, and time with 20,000, we get 5 million, and the total of the goodwill for the debenture is 2 million. Okay, next for the main scheme berhad, the consideration transferred from cash is 100,000, and we must calculate the contingent consideration, which is RM1.35 times with 60% times with 400,000 of the ordinary share and 90 cents. We get 281,600. Next, we plus up with the NCI 40% time with 400,000 and time with RM1.25. Next, we total out, we get 491,600. Next, we calculate the fair value of the net asset. First, we have the OSC 400,000, the retained earnings 69,000, and the current profit 36,000 times with 2/12 because the view-centric acquired a miskin on the 1st March. And general reserve 10,000 and the ARR of the property 2 million. We total out, we get 487,000, and we minus out, we get 104,600. Both we get goodwill. Thank you.
Assalamualaikum. My name is Zarfitra binti Zainal Abidin, and I'm going to answer the part C and part D of question 1. So for part C, it asks for the computation of NCI and also the group return profit. As for the NCI, the holding company, which is the view-centric, hold 20% control of the NCI in the SQZ berhad. So we multiply the 20% with the 200 million of units of ordinary share in SQZ, multiply with the market price per share, which is RM1.40, which will be amounted to 56 million. And for in the miskin, the holding company hold 40% control of the NCI. Therefore, we will multiply with the 400 million units of the ordinary share in the miskin, and the market price per share which is RM1.25, that will be amounted to 200 million. Since the holding company did not acquire any preference share, therefore the 100% is owned by the NCI. Therefore, we will multiply with the 200 millions of preference share, and we will get 200 million. As for the retained profit, we will start with the retained profit of the holding company, which is the view-centric berhad. the total amount of retained profit is 376.2 million, will be credited wholly into the group retained profit account. And as the question asks for full goodwill to measure its NCI, we will portion the impairment of 2 million according to the percentage of control, which is 20% and 80%, which amounts to 400,000 and also 1.6 million. So for the retained profit of subsidiary 1, which is the exquisite Berhad, the total amount of retained profit is 36.73 million. Will be apportioned accordingly to the percentage of control, which is 20% and 80%, which the amount will be 7.346 million and also 29.384 million. Next, we will move on to the question B, which asks for the consolidated statement of profit or loss and other comprehensive income. First of all, as the Bucentric Berhad, which is the holding company, acquired Miskin Berhad starting from 1st March 2018, therefore all the amount in a statement of profit or loss of a Miskin will be apportioned to only 10 months. First of all, the turnover, we will minus the 35 million, which is the unrealized profit of the closing stock. And then for the cost of sales, we will also minus the 35 million, and then we will plus with the 4 million, which is the closing stock, and we minus the 350 million, which is the 350,000, which is the opening stock. And then we will get the gross profit of 689.93 million. As for the interim ordinary dividend from exquisite, we will minus from the original amount because it is the intra-company transaction. And for the operating expenses, the total amount we will minus with the provided depreciation of the plant and also the property, which is the 600,000 and also 400,000. The debenture interest, we will also minus from the original amount of 1.6 million, as it is also the intra-company transaction. And we will also minus the impairment on goodwill, which is the 2 million. And we will get the profit before tax of 233.030 million. And later we will minus the taxation of the 3 company, which amounted to 73.5 million, and then we will get the one for 59.53 million. And this amount will be attributed to the holding company and also NCI of both subsidiaries. For the NCI of subsidiary, for the NCI of exquisite Berhad and Miskin, we will start with the profit after tax of both company, and then we will plus minus the adjustment, which includes the provided depreciation, under provided amortization, unrealized profit of plant, over provided depreciation, and preferential dividend. After all the adjustment, for the exquisite Berhad, we will get 2.58 million, and then the Miskin Berhad, we will get 35.667 million. And then it will be apportioned according to the percentage of NCI for each company, which is 20% and also 40%, which we will get 516,000 and also 14.267 million. For the exquisite Berhad, we will plus with the 12 million, which is the NCI of the preferential dividend, and the total amount of 12.516 million and also 14.267 million will be credited to NCI for both subsidiaries. For the holding company, we will get this figure as after deducting the NCI for both companies from the total of the profit after tax. That's all from me. Thank you.
Assalamualaikum. My name is Nufar Afrika Binti Muhammad Saleh, and I am going to explain the part E and F of the question 1. Question E asks us to prepare the consolidated statement of changes in equity of Bucentric Berhad for the year ended 31st December 2018. Firstly, the format of calculating the SOCHE is we have to plus the opening balance of retained profit with the net profit after tax, and then we will have to minus with the appropriation, which are the ordinary share dividend and also the preference share dividend that will be equals to the closing balance of retained profit. Okay, for the opening balance of the retained profit, it will be counted in the working one, which is the retained profit, the retained profit of the holding company of 99 million will be added with the retained profit of the first subsidiary, which is the Exquisite Berhad, of 54.1 million. After that, the pre-retained profit of 12 million will be minus, and that will equals to the post-retained profit of 42.1 million. The 42.1 million will be apportioned according to the percentage of control, which is 80%, that will be equals to 33.68 million. After that, for the second subsidiary, which is Amazkin, the retained profit of 69 million will be minus with the pre-retained profit of 75 million, that results in the post-retained profit of negative 6 million. The negative 6 million will be apportioned with 60% of control, that results in negative 3.6 million. The total of 99 million plus with 33.68 million and minus with negative 3.6 million will make the total of 129.080 million. The amount will be transferred into the retained profit brought down. The amount of the retained profit brought down of the NCI will be is derived from the calculation of net asset of both subsidiaries at the date of acquisition. Firstly, the net asset of Exquisite Berhad, which consists of ordinary share capital, pre-retained profit, pre-general reserve, and also asset revaluation reserve. It will be amounted to 262 million, and it will be apportioned with the 20% of the percentage of control of NCI, that will result in 52.4 million. As we already calculated the post-retained profit from the previous calculation of 42.1 million, the amount will also be apportioned with 20% of the NCI percentage of control, which results to 8.42 million. We will also add the preference share capital of 200 million. The next one is for the net asset of Amazkin Berhad. It also consists of ordinary share capital, pre-retained profit, and also pre-general reserve. The amount of 485 million will be apportioned to the 40%, which is the percentage of control of NCI, that will amount to 194 million. The post-retained profit from the previous calculation, with the loss of 6 million, will be apportioned according to the percentage of control of NCI, which is 40%, that will result in the loss of 2.4 million. The total of the amounted will be total up to 452.42 million. The next question asks us to prepare the consolidated statement of financial position of Biocentric Berhad as at 31st December 2018. First of all, we will have to add the original amount of the three companies along with the plus and minus of the adjustment. Firstly, the non-current assets, which consists of the property, will be added with 30 million of ARR amount. For the plant and machinery, it will be minus with 2 million, which is the intra-company transaction, and will be plus with 400,000 of over-provided depreciation. As for the brand, we will capitalize the brand that was not previously recognized with the amount of 2 million. The next one is the current assets, which consists of the inventory, will be minus with 4 million of closing inventory and also the 350 of opening inventory. For the trade receivables, it will be minus with 7 million of intra-company transaction. The bills receivable will also be minus with the 3 million of the undiscounted bills. Okay. As the cash and goods are to be received next year, the amount will be treated as cash and goods in transit. The next, we will only recognize the equity of the holding company, which is Biocentric Berhad, along with the NCI that was calculated before. And for the non-current liabilities, we only have the 8% debentures. The next one is the current liabilities, which consists of the trade payables will be minus with 7 million of the intra-company transaction. The bills payable will also be minus with the 3 million of the undiscounted bills. As for the debenture interest payable, the original amount of 1.6 billion will be minus with 400,000 that has been paid by the subsidiaries. The next one is the dividend payables, which consists of ordinary share capital and also the preference share capital with the amount of 50 million and also 12 million is also included under the current liabilities. And that is all from me. Thank you.
Hi, Assalamualaikum. My name is Amira Nurul Adila binti Osman Bakri. I will present on question number 2 and question number 4. As for the question number 2E, explain briefly the meaning of joint control as specified under MFRS 11 joint arrangement. According to MFRS 11 joint arrangement, joint control is defined as a contractual agreed sharing of the control of an arrangement which exists only when the decision about to the relevant activities required to the unanimous consent of a party's sharing control. The party have to assess the extent to which the party should act together to direct the activities that significantly affect the return of the joint arrangement. Next, we will go to question number 2B1. The question is to describe the type of arrangement above and explain the appropriate accounting treatment in accordance to MFRS 11 joint arrangement. In this situation, Delta Berhad and Global Berhad have the rights, title and ownership of the asset to the arrangement, but not the net asset of the arrangement. Yasser Berhad also not own any of it. Therefore, the joint arrangement between Delta Berhad and Global Berhad is a joint operation. The accounting treatment for joint operation is a joint operation shall recognize in relation to its interest in joint operation, which is its asset, including its shares of any asset held jointly. Second, its liability, include its shares of any liabilities incurred jointly. Third, its revenue from the sales of its shares of the output sharing arising from the joint operation. And the fourth, its shares of the revenue from the sales of the output by joining the operation. And last, its expenses, including its shares of any expenses incurred jointly. Now we will go to question number 2B2. The question is on assuming that Yasser Berhad has the right to its asset and obligation for its liabilities. Would there be any difference to its accounting treatment? Explain. There will be a difference to Yasser Berhad accounting treatment. Since they have the rights to the asset and obligation for its liability, it has been a joint operation. In a joint operation, the operation will recognize in their own financial statement their interest on asset, liability, revenue, and expenses in the joint arrangement. At the end of the reporting period, a memorandum statement of profit and loss may be prepared to determine the share profit of each operator. In separate financial statement and in consolidated financial statement, the operator itself has to disclose their shares of joint control asset, liabilities that they have incurred, and their shares of revenues and expenses. Okay, next we go to question number 4. The question is to explain about the argument that have been stated in the question. According to MFRS 10 consolidated financial statement, an investor are determined whether it is apparent by assessing whether its control to the investee only if it has all of the following. The first, power over the investee. Second, exposure or rights to the variable returns from its involvement in the investee. And third, the ability to use its powers over the investee to affect the amount of investor return. For the situation of Bumi Kenyalam, the argument by the first director is acceptable because to determine whether the investor has the control or not, it must satisfy all of the requirements of control. However, in this The investor only satisfied the requirement of having the ability to affect return in the investee, but not having the power and exposure or rights over the investee. If the investor holds less than 50% equity interest in the investee, he only can be associate or just a simple investment in the investee. That's all for me.